Good afternoon, Fabio Donetti with the Musings of Winston. And we're going to cover the week of May 10th to May 14th, when we have two big debates going on in the markets. One, inflation or no inflation, and then growth or uneven growth. Let's start with the growth issue first. We have two numbers that were a little bit surprising. The labor report was way below the expectations. Markets were thinking around a million, and the number was only 266. So people remember or reminded people some of the comments by Chairman Powell that the recovery of the economy is very uneven. We're still far away for full recovery. To that, we can add retail sales, that after a 10% growth in retail sales in the month of March, the numbers for April came at flat zero. So some people think that it was, the effect of the $1,400 that the government sent to people, but after that, there is, some issues there. So we're not there, and part of that debate is, on this whether this growth is here or is not here. The second debate is inflation or no inflation. We have this week both CPI and PPI numbers were above expectations, looking into 3.5% when the Fed is talking about 2%. But there is a big debate. A lot of people think that this is just temporary, as the chairman of the Fed, Powell, and Secretary of the Treasury, Yellen, think that this is just temporary as we're coming out of COVID and there is too many bottlenecks in the world economy. Others, like Stan Druckenmiller and Larry Summers, think the opposite, think that the government is doing way too much fiscal stimulus and inflation is here to stay. So on that, obviously the market is confused. We have a lot of volatility. On the week, the S&P was down 1.4%, the Dow 2.3%. Could have been worse because we had a rally over the end of the weekend, over the end of the week. But the thing that is important is that there is no loan creation. And remember, the central banks do not create money. They just been buying bonds. They make credit cheap. When they buy the bonds, they buy from the banks get the cash. But if the banks don't lend the money out to people, there is no pressure to buy stuff. And the ratio of loans to deposits has collapsed in the last year. Yes, a lot has to do with people putting a lot of cash on the banks because they're not spending it because of COVID, but also the banks are not lending money out for various reasons. People are not borrowing, the big corporations are not borrowing. So that's what we have. So net, let's stay away for a little bit. We recommended 10 days ago to sell some of the risky assets, mainly equity, maybe 5-10% of your portfolio. And let's wait and see. I think we will have to digest a lot of numbers before the market has a clear idea of what's happening. So we'll wait and see what happens on that side. One of the big things is that usually, personal consumption is one of those it's very stable even in recessions. It gets, 1 or 2 standard deviations. Right now, we are 5.5 standard deviations above the average. And again, that has a lot to do with this very big change in patterns of consumption. Used cars, toilet paper, things that you were like very significant, the extra PC that you need to work from home, the extra chair, but then you're not commuting, you're not taking a vacation, so there's no hotels, no planes, no Disney. So all the numbers are very, very confusing. Other things that happened in the week, where this Colonial Pipeline was hijacked by cyber terrorists or whatever you want to call them. At the end, they did pay $5 million rescue, which we think is a pretty bad idea. And now it looks like the dark side, the company that was doing the hacking, has shut down or disappeared. We don't know if they did it on purpose. They did it as a fake thing to disappear, or they were shut down by law enforcement people around the world. We don't know, but it's kind of very confusing, not very good. We have record buybacks this year. About $500 billion are being bought back by companies. So that's going to be a decent and good support for the markets. And then this week we have some more color on the numbers. We have Home Depot, Macy's, and Walmart, Target, and TJX and Lowe's. So big companies are reporting earnings this week, especially Home Depot and Walmart. I think are going to give us more color on what's the economy doing and what's going there. So that's all. Have a great week. Like always, 8:30 live from New York for our class. Have a good week.